that's the last bit of the show today. There are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Hemant Rustagi, Wise Invest Private Limited. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on the Money Show at etnow.tv. So, Hemant, good evening and welcome to the show. We'll take up the first question of Mr. G.V. Raju, and he has 50,000 to invest in mutual funds for 2 years. That's a time horizon for him, and he wants to understand or have a recommendation of best funds to park his money for 2 years.
Well, Kavita, since he wants to invest for 2 years, obviously he can't take too much of a risk. At the same time, I think the attempt should be to invest in an option where he can get slightly better return than bank FDs. So in that sense, I think what will suit his time horizon is short-term income funds. There are 2 funds that I'm recommending for him. He can choose one because he's investing 50,000. He doesn't require 2 funds. So it could be HDFC short-term debt fund and Nippon India short-term debt fund. But if he's someone who can take slightly more risk and he has some flexibility in the time horizon, maybe another option that he can consider is equity saving funds. These are the funds which primarily invest 20-25% in equity, the rest in arbitrage and debt, in a manner that arbitrage and equity is more than 65%. So the taxation is of equity funds here, which means that when he will withdraw his money after 2 years, he has an opportunity to get higher return. At the same time, he'll end up paying only 10% capital gain. So these are 2 options depending on the kind of risk he wants to take. He can choose one of these.
All right, we move on, and the next question is of Kantaraj from Bangalore, and he says that he's invested 1.5 lakh through SIP in Tata Digital India Fund and ICICI Pru Technology. For the next 5 years, how is the trajectory of these sector funds? We don't have him on the phone line, I guess, otherwise we could have asked him about the rest of his portfolio also, because these are sector allocations specifically in these 2 funds he's talking about. Although these 2 sector funds standalone are doing good for themselves, but then having a sector allocation and that to 2 funds, how over diversified is he in this particular space?
Well, Kavita, I think what we have seen is, as far as the IT sector is concerned, we have seen the IT sector has had very tough time in the last 15 to 18 months. That's primarily because the inflation was very high, it's still very high, and there were obviously rising interest rates by the Fed. So obviously, the impact of that was on this sector. That's why we have not seen this sector doing well. In fact, there are instances where there are negative returns. But important thing is that on the long-term basis, I still feel that this is a sector which has the potential. Now, for him, he has remained invested through this most difficult period of 15, 18 months. And luckily, because he's investing through SIP, he's been averaging his price down. And I think as and when the sector will turn around, he'll get the benefit of that. So my own sense is that it may take maybe a couple of more quarters for this sector. Once, Fed decides to pause interest rates, maybe the next step would be that there will be some interest rate cut at some stage. That's a time when you'll see IT sector doing very well. So like I said, because he has been investing during this most difficult phase, I believe, and as you rightly mentioned, both these funds are doing very well in terms of within the sector performance. If you see, both these funds have a very good track record. So he can continue with that. Of course, there is an important aspect that has to be seen as what is the exposure to these 2 sector funds vis-a-vis the overall portfolio size. Because it's not available, we can't really comment on that. Also, I always believe that whenever you choose a sector, if you have other funds in the portfolio, please try and see how much exposure you already have to those sectors through the other fund. If you already see, because IT is one sector where you'll see healthy exposure by all the funds, especially the flexi cap, multi cap, or the large cap. So have a look at that. Like I said, decision to continue or not will obviously consider different factors. But my belief is that since he has gone through the difficult time, he should continue.
All right, we move on, and we have Mr. Kishore Kumar on phone line with us. Hello, Mr. Kumar. Good evening. Thank you so much for sending us your question.
Good evening.
Okay, so good evening, sir. You're calling from where?
Tirupur.
Tirupur. Okay. So you have never invested in. Got it, sir. You have never invested in mutual fund, equity mutual funds, or
no,
have you?
I have been an investor for past 15 years.
Okay. All right. So right now, other than mutual fund equities, equity mutual funds, you want to know you want to understand about bonds, which are a safer mode of investments for you. You're talking about the retirement corpus, I believe.
Yes, of course, you're right.
Okay, so UP Power Scheme you have invested in for a long term, but then you don't know much about it, and you have bought stocks also for yourself. Do you have a stock portfolio also?
I reduced investment in stocks, in equities. Now I reduced it and I've gone to mutual funds.
Sure. Okay, all right. Okay, so since you've already invested in this UP Power scheme for a very long time, as in that's a long-term horizon, apart from that, any new investment that you want to make into bonds for which you want a suggestion or recommendation from
not
an
only
expert?
bonds, I want, not only in bonds, I want to know whether any other asset which can suit me for the
apart from
age
fixed
of mine.
deposit. Okay. Have you tried
yeah.
Senior Citizen Savings Scheme? Have you given it a thought?
I just invested 5 lakhs in that post office, that scheme, senior citizen scheme.
Okay. All right. So Hemant, he's clearly looking at his post-retirement corpus and he cannot take much risk. He's invested in this particular scheme that he's mentioned in the question. Apart from that, any other safer investment instrument that you might want to recommend?
Well, I think before I say which are the other mentioned, I would like to really highlight the fact that I can understand that once you retire, post-retirement, you don't want to take too much risk. But I think it's always important to remember that the risk of inflation is always there, even after retirement. So it's important to work out a strategy, choose funds in a manner that you're still able to, stay ahead of inflation. So I think that's very, very important. You already mentioned about a couple of, investment options, Kavita. So my belief is that apart from mutual fund, obviously there are small saving fund, there is post office monthly income scheme, there are government bonds, there are REITs, which can give you, a regular return. But in my view, the systematic withdrawal plan, if you invest in mutual fund and if you opt for systematic withdrawal plan, because there it gives you the option of choosing the kind of asset allocation you want to give. Plus, I think when you opt for SWP, it has many advantages. You get fixed return, irrespective of the market condition. The returns are more tax efficient. And as I mentioned, it gives you an opportunity to stay ahead of inflation. So my view is that, for example, you can consider something like a balanced advantage fund. Consider that. Other option which we mentioned will give you return, but the returns are not tax efficient, the returns are not high, and you will not be able to beat inflation. So in my view, I think the mutual funds still have to be an integral part. And if he's referring to UP, Power Corporation bonds, well, of course, they are relatively safer option. Obviously, they give him a quarterly interest. But again, like I mentioned, that the post-tax return is something that you need to be more concerned about rather than just looking at the gross return.
All right. Is there anything else, Mr. Kumar, that you might want to know? All right. We move on. We'll take the next question, which is from Binoy. And he wants to know the format of systematic withdrawal plan.
Well, Kavita, as I just mentioned, that systematic withdrawal plan is a smart mechanism that allows you to withdraw a certain sum on a fixed date, through the mutual fund. So there are two ways of doing it. One, either you have to accumulate a corpus over a period of time. And if you're not being able to do that, if you have already built a corpus, then you have to invest it in a fund and then register for a systematic withdrawal plan. It can be done either offline or it can be done online. In SWP, you have the flexibility of deciding how much money you want to withdraw every month. When do you want this money to come in, at what frequency, and how much you need to invest. Once you do that, irrespective of market condition, that money will keep coming to you. For example, if you choose a monthly option, it'll keep coming to you. And I think more importantly, like I mentioned, I just want to reiterate that if you choose some like balanced advantage fund, they give you an opportunity to make your money grow at the same time, get your regular income. But you need to be a little careful in terms of how much you're drawing. So my personal preference or recommendation would be look at withdrawing 5 to 6%, so that a fund like balanced advantage fund can still give you 5 to 6% in addition to the income that you get. So it's a great mechanism. I think it's a great tool for all those investors who are struggling to get regular income, at the same time would like to ensure that their money grows at a rate where they can stay ahead of inflation.
And SWP as a feature can be applied to equity as well as debt mutual funds, Hemant?
Oh yes, absolutely. It can be done with any fund. That's the beauty. depending on the kind
Sure.
of risk profile you have. But like I said, if your intent is to make sure that your money continues to grow in addition to the regular income that you get, then you have to be careful in terms of what you're selecting. Of course, it also depends on overall portfolio size. Also, how much money you need to get out of this through SWP. That will determine the kind of funds you should be looking at.
Sure. All right, I think that will be all, and that's the time we have on the show today. Thank you so much, Hemant, for being on the show and helping our viewers with their financial planning. And time to sign off, but then I'm going to leave you with our WhatsApp number where you can send us your portfolio-related questions, be it mutual funds, insurance, tax, loan, anything that you want to understand about your investment portfolio. WhatsApp us your question. You can also email us your question, and we'll get it answered by our experts on the show. Thank you so much for watching. Goodbye.